Hello traders, welcome to the channel and welcome again to another technical analysis in the Forex market. Let's start with the DXY. I was expecting the formation of this inverted edge and shoulders pattern. We had a resistance at 104.55 broken, but as we can see, the market has found some pressure at this regression trend line from this descending channel or this consolidation channel on the DXY has found this regression. The midline of that channel has exerted some pressure to the downside and forced the price to recover the neckline again below 104.55. Basically, the market is forming what we may call an expanding triangle, which usually is the most difficult patterns to trade if you don't identify this pattern earlier. Very difficult to navigate this sequence. It's an expanding triangle, as you can see, higher highs, lower lows. I will expect a lower low at this point. Based on what I see, I will expect the DXY to trade even lower, eventually breaking this or threatening the violation of this daily fractal support at 104.08 and or eventually an approach to the previous lows and weekly fractal support at 103.65. Let's observe for now, nothing more to add for the DXY. The cable, nothing different from my previous approach. We were facing the 50% Fibonacci level. We remain inside this range, so we have a new fractal support at 28.06 and we have a minor resistance also at 28.68 and the monthly fractal recovered at 128.94. So I told you before, my expectation is to see the cable to reinforce this shining channel, so it may converge with an approach to this 38% Fibonacci retracement level 127.60. So that's kind of a convergence zone between the Fibonacci retracement level and the bottom of this ascending channel and its structure support trend line. So I will admit that possibility also for the cable. Very much the same for the euro versus the dollar. We were trading the 50% Fibonacci retracement level. We remain above this 108.06. New fractal support already adjusted to the recent lows, of course, 107.97, and we have already resistance or a fractal resistance at 108.35. So that's our range for the euro versus the dollar. I point to the 107.73, the 61.8% Fibonacci retracement level, which converges with the, let's call it a minor pivot level. Here we have a fractal resistance at 107.76, and right after breaking above this resistance, there's a fractal support retesting the previous highs, forming a pivot zone, a support level to trigger this momentum to the upside. So I will pay attention to this specific price level that 107.73 converges with the 61.8% Fibonacci retracement level for the euro versus the dollar. Of course, it may trade even lower, eventually searching for a trend line support, also approaching from below. We will be here to track that possibility. For now, I don't have a clear idea what to do with the euro versus the dollar, and I advise to remain calm and patient and wait for the best trade setup to start to emerge, not for now. Aussie, I called your attention to this consolidation above this 61.8% Fibonacci retracement level. I was expecting moves to the downside. We have a broken support level already. Nothing more to add, so I admit more bearish momentum also for the Aussie, but I have no patterns to show you there, at least for now. Not the same case for the Kiwi. We have a 88.6% Fibonacci retracement already reached at 58.93, and that's the completion point of a bullish bat pattern. So I will expect a bounce for the Kiwi. Don't ask me the reasons and the whys. I'm just tracking the patterns. I will expect a reaction to the upside. We have already a nice reaction and one initial reaction after forming the sequence. 38% Fibonacci retracement level, 59.96. That's a default target for that pattern for the Kiwi. Of course, with the Kiwi, starting to bounce or starting to find some pressure or support or pressure to the upside. Aussie versus the Kiwi, and also converging with the momentum for the Australian dollar. The Aussie versus the Kiwi breaking the daily fractal support 110.34. We are already trading the default target for potential technical double top 109.83. I admit a visit to the previous monthly fractal resistance at 109.42. Let's also track the Fibonacci retracement levels from these previous lows to the recent fractal resistance that may converge with the 50% Fibonacci retracement level. And let me also just track these golden Fibonacci. Actually, we are now facing the golden Fibonacci, the 161.8% Fibonacci extension of the last swing high. So pay attention to this pressure element, this Fibonacci element of pressure, usually a reversal Fibonacci extension level, the 161.8% Fibonacci extension. 109.63, we have the monthly fractal a few points below 109.42. That's a nice price zone to find support also for the Aussie versus the New Zealand. Of course, if the Kiwi keeps trading higher, eventually the pair will suffer some pressure to the downside and eventually will threat the monthly fractal or the recovery of the monthly fractal again. Let's jump into the dollar versus the Canadian. We have data coming related to crude oil. And we have this bearish shark pattern completed at 38.62. I called your attention before to this pattern. The default target for that pattern, 38, 50% Fibonacci retracement level. Manage your risk if you want to engage these trades. Of course, always manage your risk accordingly. We never enter the market to lose more than what you expect to win. So if you expect, let's just measure 0.6% move to your targets, you should not put your stops above this ratio. So you should not cross this 0.63% as risk for your trade, and you are playing a one-to-one risk reward approach if you do so. So you always try to minimize your risk and maximize your profits. That's how we build our cake in the market. So dollar versus the Swiss franc, nothing to add. Descending channel, we have a nice parallel structure also unfolding here. So let me try to show you this descending channel, this major channel, kind of a structure to the downside, also reinforcing this momentum. Daily fractal support remained at 87.74. We have also a new fractal resistance adjusted at 88.75, so that's our range for the CHF. 113% Fibonacci extension, 86.60 below the support level. We need to wait for those levels in order to consider some pressure to the upside for the Swiss franc, at least considering, of course, and taking into consideration advanced patterns or patterns the market may form. We are talking about one eventual bat pattern or alternate bat pattern that may start to emerge if the price achieves this 113% Fibonacci extension level. For now, we are just observing, nothing clear for now. Actually, let me rephrase this because this is not correct at all. We have this potential right shoulder on a daily time frame. If you increase your time frame, you'll see this may work as a higher degree edge and shoulders pattern, but somehow that golden Fibonacci, that 113% Fibonacci extension makes no sense. I need to track not the 113% Fibonacci extension, but the golden Fibonacci extension level, the 161.8. Okay, it's a bit different. It creates a different range to work with, but that's what it is. I need to search for the 161.8% Fibonacci extension of this swing high. We will talk about the eventual crab pattern projected at 86, 87. So there's a cluster box to work with, both golden Fibonacci retracements and extension levels projected below support level. That's the zone that will pay attention to the Swiss franc if reshould. So I will pay attention to the bullish crab pattern below support. Dollar versus the Norwegian krone, I call your attention to the potential cup and handle pattern formation, but before unfolding into this, or before activating this or triggering this pattern, we should see the formation of the handle. So which implies a retracement. Usually I track, as I called your attention before in my previous video, I track the 38% Fibonacci retracement level. We are almost there, 1086, that's a 38% Fibonacci level. I will search for support at these levels to trigger that bullish momentum, and eventually that will help activating or validating this eventual cup and handle pattern formation, which implies a violation of the resistance, of course, and then more momentum to the upside, as I called your attention before. Now let's jump into the yen pairs, and let's start with the dollar versus the yen. We have a bullish shark pattern completed at 150.26. This pattern implies a new bounce for the pair towards the 50% Fibonacci retracement level, or eventually it's just a retest of the previous lows, but default targets for the pattern at 152.74. Heavy, all the yen pairs are heavy at this point, so be careful with these patterns. Also, they may work as a reversal, but well, manage your risk accordingly. So don't take a huge risk taking these reversal patterns. Of course, always take that into consideration, specifically when you face very strong bearish momentums. If you try to take a trade to the other side or a reversal trade, always be cautious with your risk. So, but that's what it is. I track the patterns, I track the harmonic advanced pattern formations, and this is what we call the bullish shark pattern, a 224% Fibonacci extension of the last swing high. So we are projecting a pattern at the extension of this last swing high at 224% Fibonacci level, and completing the sequence. The same, of course, this will not imply, you know, a big reversal. As I said before multiple times, we rely on the default targets for those patterns. So if this is, if it is a 50% Fibonacci retracement level, it's not the same as targeting the previous lows and previous resistance level. Okay, it's a 50% Fibonacci level, you should target the 50% Fibonacci level, not further than that. That being said, they can fail, and because of that, we need to manage we need to manage our risk and position sizing in order to control our losses just in case. Dollar versus the yen. We have also Aussie versus the yen already breaking below the monthly fractal support level. Nothing to report here. As we can see, in this case, we have already the pair already broken the not only the golden Fibonacci extension, but also the 224% Fibonacci extension, which is the level that we are tracking at the dollar versus the yen. So we are tracking the 224% Fibonacci extension. As we can see, the Aussie versus the yen already crossing those levels, so more downside is expected, and I do expect more bearish momentum for all the yen pairs. I shared with you already the monthly charts for all these pairs with bearish patterns suggesting a deeper and more significant pullback. But as I said, the market will not trade in a single direction or in a direct move towards those levels. Specifically when we face higher time frames, you need to understand the market will take time to achieve your targets or to complete your patterns, and during that process the price will trade in the inverted direction. So if you are, let's say, if you are bearish, there will be periods of time where the market will bounce and trade against you. And it's not different in the for the euro versus the Japanese yen. We have the bullish shark pattern. Actually, we have a bullish crab pattern, not the shark, but we have a bullish crab pattern at the golden Fibonacci extension. I admit a possible bounce reacting to this pattern, but ultimately we will see more bearish momentum, and the market does not need to bounce in order to continue to trade lower. So it can trade lower directly without creating these, or without giving sequence to this pattern. Okay, just to say they can fail. They are not 100% guaranteed that they will succeed. So there's a good probability behind those patterns, but they also fail, as many other strategies that you use trading the markets. They will fail sometimes, they will succeed, so we just manage the risk accordingly. Pound versus the yen, another one, a few points below already the completion point, 193.39, 224% Fibonacci extension level. I admit a bounce and a retest of the support level. Eventually later we will be talking about more downside momentum. The New Zealand versus the Japanese yen did not complete the pattern yet. We are close to completion, to the completion point, 88.51. As I said before, we were at that point that I shared my previous analysis. We were far from the monthly fractal resistance, and now we are of course already approaching these previous fractal resistance level at 88.16. So pay attention to this bullish shark pattern also for the New Zealand versus the Japanese yen. The same happens for the Canadian versus the Japanese yen. Bullish shark pattern projected at 108.94. We are already trading a few points lower or below this completion point. A move towards the 50% Fibonacci retracement implies a move towards 110.24. So that's a default target for this sequence. If that's the objective, we will track that possibility and eventually a reaction to the downside if reached. Euro versus the pound. My last video, we were trading the bearish shark pattern above 224% Fibonacci extension, 84.52. Nice reaction to the downside and new fractal support at 84.07. Actually, let me update these levels for the euro versus the pound. New fractal support 84.07, and actually that's a few points above. That's the most recent one, 84.10. We have the daily fractal support, that one, the previous lows. We have also the resistance level adjusted to this broken level at 84.29, and of course the daily resistance at the highs 84.60. So updates done for the fractal levels. We were facing, as I said, we were facing this bearish shark pattern. The market has found some support, probably the golden Fibonacci extension level right there, 78.6, almost a 78.6. At this point, nothing more to head for the pair. Let me just track this. So we have almost a 78.6% Fibonacci retracement at the bottom, and we have the golden Fibonacci level right there as resistance. So we have golden Fibonacci as, actually we need to consider the 61.8 as support also for the pair, since it failed at the 78.6. So we rely on the 61 and at 61.8 as support, 61.8 as eventual resistance. We are now facing this Fibonacci level, and that sequence or those ratios always guides me into a very specific pattern, which is a Gartley pattern. That pattern comes projected, let me just show you. That pattern comes projected at 83.92. So if somehow the price breaks below the support level, we will face at some point the bullish Gartley pattern. So this is just one of the possibilities. Of course, we are far away from completing this pattern. At this point, we are only approaching the previous, if we consider this kind of a parallel structure or ascending channel. As you can see, a threat to break above the channel failed, forced the price to recover the channel again, and if somehow the price approaches the bottom of this structure, it may help form the Gartley pattern. The same that happens above the channel resistance may happen below the channel support. So which means the false breakout above the channel usually forces a false breakout below the channel support. So I will expect at some point, if the price starts to trade lower, of course, I will expect the formation of the Gartley pattern at 127% Fibonacci extension. No other patterns to track. For now, we have the daily fractal 8460, which is important to consider. If the price recovers above these levels, it may trigger a retest of the previous highs. But until there, we need to wait and see how the market will react. Pound versus the Aussie. Some of you will remember this bearish crab pattern that we projected at the beginning of the week at the golden Fibonacci extension level 98.54, and we are approaching that level. So we should have at least, that's my expectation, bearish divergence. I will expect a new higher high just to complete this sequence, and if the price completes the pattern, I will expect a retracement back to the 38% Fibonacci level. Eventually, with a new higher high, we will face a three drives pattern formation. So pay attention to a new higher high, and eventually we may see, a pullback or a small pullback, in order to complete then later a new third high and to complete the sequence above, and that may converge with the bearish crab pattern at the golden Fibonacci level. So stay tuned also to this pattern. Let's go into the commodities. Gold, we have a bearish cipher pattern on gold projected at 78.6% Fibonacci level, 24.55. I will expect a reaction to the cipher. I will expect a bearish reaction or a small pullback eventually to the 38% Fibonacci level, which is the default target level. But we have also the daily fractal resistance at 24.32, so I will not be surprised to see that the gold market pulling back to this previous resistance level. On the other, there's always the possibility for our insights and our analysis to fail. And if the cipher pattern, if the price does not react to this cipher pattern, I will expect a retest of the weekly fractal resistance, and eventually that may offer me a nice, or let's say a most friendly or more friendly risk-reward approach to trade the gold market, if somehow it makes sense to try to short the market above. But there's also the possibility to unfold into a bearish crab pattern at the golden Fibonacci level, which converges with the weekly fractal resistance level. So golden Fibonacci 24.81, right below the fractal resistance level, and the crab pattern should also trigger some retracements for the gold market. As gold recovers with some power, let's say, silver remains very shy. we are now facing the lows of these three drives pattern formation, so we are now facing the previous structure support level. This may act as resistance and pressure to the downside on silver markets. We are also approaching the 38% Fibonacci level at 28.99. But even though, if the gold market keeps trading higher, eventually silver will progressively follow, even if not so strong as gold, but at some point will follow the metal and eventually will approach the previous weekly resistance at 99.44. That's my expectation for now. If silver recovers above this resistance, previous support level, a recovery above these levels, I will trigger a visit that should trigger a move and a visit to the daily fractal level at 29.44. Crude oil, another pattern that we have projected at the 88.6% Fibonacci level. We have new support level. Let me also update these most recent fractal support levels and resistance levels for crude. We have a new support at 75.41 with resistance, minor resistance at 76.81, even though below the previous daily fractal support level. And by the way, let me also consider this, because there's something wrong here. The daily fractal support remains placed at these previous lows. Okay, and actually what I need to adjust, it's a daily fractal. Okay, that's okay. Daily fractal resistance at 79.64. So I admit that the recovery above these fractal resistance, which occurs in today's session, may trigger the visit to this previous resistance level at 79.64, 79.70, and eventually a retest of this fractal support level at $80.29. So I admit a bounce on crude oil, even without completing this bullish pattern that I projected at 88.6, 74, and 10. I admit a possible bounce on crude oil, specifically targeting this previous resistance level. It makes sense to visit this fractal zone again on crude. XPX 500, nothing to say. Wait for a breakout of this structure. We have a range between 54.97, 53.98. Nice consolidation, eventually a bearish flag pattern unfolding. At this point, I will expect, we need to wait for violation of resistance above or a violation of the support below. So wait for those two possible scenarios for SPX 500, and the very same will happen for the German DAX. We have daily fractal resistance level 1865 or 658 actually. We have daily fractal support 18097, and a lot of things may happen here. That will depend where the market will break. If the market breaks higher, we have patterns between 18,809 and basically the 19k above the previous high. So we have multiple patterns projected above, and I have multiple patterns projected below. We have patterns projected at the previous support level, and we have patterns also projected below the weekly fractal support 17,814. Golden Fibonacci extension, 127% Fibonacci extension level, and again the golden Fibonacci above the resistance. That will depend where the market will break. At this point we are facing structure resistance. So if somehow you search for an opportunity to sell the German DAX, we are facing resistance. If you search for an opportunity to apply a friendly risk-reward strategy, I believe this is the price zone. This may be the price zone to apply it. So we are facing a very interesting resistance levels. So I admit there will be for sure many traders interested to short the German DAX at this point, based on the price structure we have at our disposal at this point. Let's finish again with the Bitcoin and with the eventual shark pattern that I'm tracking on Bitcoin that only emerges at 62k384. So basically I need to see the price breaking the previous structure lows, and if that happens, that should print the shark pattern. And actually let's also track the retracement, or if we have kind of a convergence between some of these retracement levels. We have the 38% Fibonacci right there, 50%. Actually, there's no perfect convergence, but we have the 50% Fibonacci retracement just a few points below the completion point. So basically, if you prefer to track the 50% Fibonacci retracement instead of searching for the 224% Fibonacci extension, so we have a cluster, we can call it a cluster box between the 50% Fibonacci level and the 224% Fibonacci extension. That being said, that completes for today my analysis and my insights. I hope you enjoy and take some useful information from the content that I share in my channel. If you do so, I don't need to ask this, but press that like button, subscribe the channel, press the bell. You'll be notified every time I post new content in the channel, and usually it's similar content as you can see here, patterns and more patterns, always trying to understand where the market will print the next pattern and where I can apply the best and the most friendly risk-reward approach to trade those specific patterns. So if you enjoy, do that, and I hope to see you in the next video. Have a nice week, or at least the next few days, and of course a beautiful weekend with your friends and family. I hope to see you in the next video. Great to see you, and big hug.